Hi, this is Raghee Horner, and we are looking at the daily chart of the dollar Canada right now because there's a number of things that are happening, not the least of which is the parity level being tested again on this pair. So let me share with you my initial view of the dollar Canada, which is within the market memory. You want to have at least the 1 year look back on this chart, which means that you want really anything from the 14th of February from 2011 to the right to be the price action that you're going to consider for touch points, significant rallies and declines, and just a general view of what this pair has done on the daily time frame over the past year. And also from within this view, you want to step back and take a look at the fact that we were moving down at 4 to 6 o'clock, as you can see right there. I think we've taken on a little bit more of a shallower angle as of recently. But when you step back and look at both these angles, I think you can see that we're still clinging to that 4 to 6 o'clock downtrend, even though it's lost a little bit of that bearishness. But there's also another bearish factor on this chart, which is that parity level, which will act as a ceiling. So let's go ahead and put that level in here as well. I'm going to put it in as a red line because it's resistance. And it's a 1.0000, the quadruple zero level. Good old parity right there. So you can see prices are currently battling in this area. The two other charts that I'm considering are part of my Forextra. So if I'm looking at the dollar Canada and I'm looking at a downtrend, as I mentioned, when you squeeze in that market memory, having that 4 to 6 o'clock angle means the dominant directional bias is bearish, and the angle of the wave indicates the downtrend, and the consistency of the red grab candles confirm the organized bearish sentiment and momentum, and that's what's culminated into the trend. We have a couple things that we have to consider when we're looking at the dollar Canada, and I think the first one to consider, to interject into this conversation, is crude oil, as you can see right here. Now crude is heading up higher. We've broken that $100 century mark, $100 a barrel level. I will still consider that level for now to be resistance, if for no other reason than we haven't really established that much support above it, although yesterday's price action was a good step in that direction, so maybe I'm being a little too judgmental here. But whether you consider this still resistance or whether this is just the battleground, in which case I'll go ahead and say paint this blue to remind myself that it's really not owned by the bulls nor the bears quite yet. We want to see whether or not this will be resistance, in which case the bears own it, or whether or not this is support, in which case the bulls will own this. So I'd say we're slightly more bullish right now. You can see the green grab candles indicating that bullish sentiment and momentum, but no trend here. I want to mention that there is no trend here, and I can look at that trend with my 34 EMA wave. Notice that we're also congesting. We haven't quite consolidated yet, and the difference is the volatility. We're congesting within what looks to be an ascending triangle, the horizontal resistance coming up against and being squeezed by the uptrend line support. But that break of 100 is what? That's bullish for the loonie itself. Okay, so it should give a little bit more traction, should offer more traction against the dollar. However, what I want to keep in mind is parity is going to really factor in huge here. And we have a very convoluted situation when it comes to the Forex. So we can't just stop here at crude. We have to ask ourselves what will affect crude prices. Now, crude is rising because we're dealing with that renewed concern over the Iran sanctions and supply disruptions. I mean, this is really a supply play. The supply side is the concern here. So any kind of potential disruption of oil from the Persian Gulf could be increasing that supply side concern. So that's what I believe has pushed oil above 100. Not What I want to see in a healthy environment, which is oil and commodities in general appreciating with optimism and expansion and expectation of growth in economies around the world. But rather, in this case, we're seeing this to be a fear premium. And that is typically not going to be accompanied by our next chart, which is bullishness in the Dow. This is very much an uptrend, and I'm right now considering that the Dow might be in a position to be exhausting. We actually are dealing with tackling 52-week highs on the Dow. So is there a potential for a more pronounced correction? That's really what I'm thinking. If you zoom into the 15-minute time frame, it makes clear why I'm so concerned about the $100 a barrel mark being broken to the upside. Yet we can see, is that really a risk on the table, a risk appetite, a greed play? In other words, is the overall bullishness in crude oil being reflected by an overall bullishness in terms of risk appetite, meaning equities being pushed up? If the gears here are really to be in sync, I want to see the Dow moving up higher with crude. That's that healthy economy reflection. We're not seeing that here, are we? It's a fear premium in crude, and that fear premium also is hammering away at risk appetite, which is pushing equities down lower, as we can see here on the Dow. And we did, by the way, miss on retail sales, and that didn't help either. So when I look at this trio of charts, again with the main chart being the one that I would like to enter, being the dollar Canada here, parity is going to help me. That certainly will be a ceiling that, or at least a resistance area that I can watch and hopefully get some selling pressure at. We'll see if we can build any kind of selling pressure in this area, but what I'm looking at is the 34 EMA low and the 20 period simple. That is my zone here. Again, the 20 period EMA low, I'm sorry, the 20 period simple on the close, which is sitting now at the 0008, and then the 34 EMA low is at 0028. So there's a 20 pip area just above parity at which I would be interested in triggering a potential swing short. Now, we also have to recognize that right about this area, we have the 200 period simple moving average slicing across at the minor cycle level at 20. So a lot of interesting things happening simultaneously in terms of the downtrend in the dollar Canada, the strength in the crude oil market, but yet being met with weakness in equities and possible risk aversion. Even though we're popping up higher intraday, you can see the momentum. We really don't have an uptrend on any other time frame right now, and right now I mean 9:03 a.m. Eastern Standard Time. We really don't have an uptrend on any other chart other than maybe the 5-minute, which is in a fairly fresh uptrend right now as it is. So the slop that I'm seeing on the 15, the 30, the 60, the 240, slop, of course, being a highly technical term, of course, right? No, but that slop actually works for me when it comes to the daily, because the slop is reflective of a lack of organization of sentiment and momentum. And that slop could be exactly what I need to see some exhaustion on this chart of the dollar Canada.